Hi, Jonathan York by Financial Partners, looking at investment markets. As expected, the Federal Reserve increased interest rates again by another 75 basis points. Now that takes the target range now to 3.75 to 4%. What was more interesting was the sort of change in the sort of tone of the sort of commentary, and potentially points to a sort of softening and an easing in the sort of pace of rate hikes going forward. And certainly the market seemed to like that. Dow's up around 300 points this morning. Now that comes on the back of a very strong move in October, where the Dow Jones was up around 14%, which is one of its best months since 1976. And indeed, the US economy is still in pretty reasonable shape. The latest jobs data was still pretty strong. You've got around 1.92 job vacancies for every person looking for a job. So really the US and sort of globally as well is faced with a sort of a structural undersupply of labour. Also as well, the GDP number was a little bit stronger, 2.6 versus sort of expected 2.3. And again, more importantly on the sort of inflation aspect of that, that was starting to ease. It didn't come down dramatically, but it certainly is looking to ease now, sort of most prints that are coming forward. So potentially have we seen the peak of US inflation? And obviously going to be pretty important as we go into the sort of holiday season in terms of the US consumer and sort of spending capacity out there, given the rise in interest rates. Also next week we've got the US midterms. That's pretty important because once we get that out of the way, we then start to focus on 2024 and the run for the White House. Now, obviously, still got a few other issues out there, sort of globally. We still got obviously the Russian-Ukraine war, and Russia had potentially looked at sort of stopping the grain exports coming out of the Ukraine ports for a couple of days in sort of retaliation for one of its ships being hit by a drone attack. They now appear to be back up and running, and potentially again is this sort of a slight softening from Putin, as really did face a sort of widespread condemnation globally as Russia had pulled out of that grain shipments coming out of Ukraine. Now oil starting to come back a little bit. It didn't crack through that sort of $80 a barrel on the downside, and is now back just trading under $90 per barrel. In the UK, Rishi Sunak, the new Prime Minister, come out with some pretty tough talking and really, trying to unify here sort of Conservative Party, because, really saying you've either got to unite or you're just going to die, because at present in the polls, if there was an election today, the Conservatives would be heavily trashed, and you see a Labour majority of probably 40 to 50 seats, which again is sort of unprecedented in UK politics. Now, certainly a pretty tough time in the UK, and the Bank of England's probably about to just deliver some more bad news out there with one of the biggest rate hikes in 30 odd years. ECB came through with a 75 basis point hike. Wasn't really a surprise. They're taking their rate now to 1.5% because, again, they have been a little bit behind the curve. But again, what was surprising was that Germany, the biggest sort of economy in the EU bloc, came out with a small positive on its GDP reading. And also as well, it looks like potentially, the sort of gas supplies in Europe now are pretty much full. And, that's all sort of points as promising signs as we head into the winter. Indeed, one of the major US trading banks, predicts that gas prices in the EU bloc could fall by 20 to 30% over the next sort of couple of months. In terms of the fact that the demand coming through will be amply met by the gas that one is sort of being supplied, but also has what's already been stored in the storage tanks. In Australia, the Reserve Bank again continued with its sort of softly approach, only increased interest rates by 25 basis points. That takes our cash rate to 285. Again, there was some feeling that it could be a 50 basis point hike after the recent inflation data. But as sort of quite rightly pointed out, the Reserve Bank says, it does take sort of 9 months at least for rate hikes to sort of filter through the economy, and they prefer to wait and see how it sort of transpires on the recent rate hikes rather than sort of overhiking. Now, it will be interesting to see how this does sort of play through because, again, the Australian economy looks in reasonable shape. Now, here in New Zealand, obviously wasn't too bad a month as well in October for equities, up around 3.2%. Now, that's obviously nowhere near the sort of 14% out of the US, but it's still a sort of positive move and puts the New Zealand equity market up around 7% from its June lows. Now, that's sort of coming on the back of the Reserve Bank giving a pretty dire warning for the New Zealand economy, warning it some pretty tough times ahead. They're expected to increase interest rates again at their meeting towards the end of the month. That would take the OCR to 4%. So again, if you look back, just over 12 months ago, the OCR was 0.25%. Now, on the back of that, house prices continue to fall, and for the first time starting to see a little bit of negative equity coming through in the housing market. New Zealand's still facing, obviously, labour shortages, and it's just going to be interesting coming into the sort of summer months, holiday months, when you expect tourists to sort of come here as well to see if they can actually be catered for. Because certainly many businesses are looking for the next sort of 3 to 4 months to really be the sort of lifesaver for their businesses. Also as well, now in November, we're now just sort of 12 months away from the next election. And, again, it's sort of starting to heat up a little bit. I suspect once we sort of get into 2023, the pressure will really start to come on and we'll start to see a lot more sort of campaigning coming through. Because at present, on the sort of latest polls, if there was an election today, it looks like the government would be replaced with a national government. So obviously with interest rates increasing, say the sort of bonds coming through are showing some reasonably attractive yields at present. And if you're looking to sort of discuss what options are available for income, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.